Zach, check out my 1 kg gold bar.
That's so passé. Bitcoin is the new gold.
Hello Tianxians, welcome back to another insightful episode. How's your Christmas celebration and New Year celebration? Are you like me? Too much of a partying, eating of chocolates, log cake, and you can hear that my voice sounded a bit sexy. Okay, so a lot of celebration, now back to normal life. Have you written your New Year resolution for 2024? If you have, one of the things you might have asked is this: Pauline, I've written down my New Year resolution, which is to make more money and also to start to have more passive income. So what are the ways that we can do to create more passive income and to grow my wealth? Today, this episode is going to be very, very special. Yeah, because we're going to touch on the topic. It's either you know nothing about it or probably you know a lot about it. Yeah, that's what I've been saying, because it's about digital assets and blockchain. And today we have a very special guest, and he is Zech David, who is the CEO of Blockzy Lab Academy. Blockzy Lab Academy does this thing, which is to teach people how do you invest in blockchain as well as digital assets. Knowledge is really important before you start to invest. So let's welcome Zech David.
Hi everybody, I'm Zech David. Thank you for having me on, Pauline. Very glad to be here to share.
Hi Zech. So first of all, I would need you to answer the very first question of educating me and all our audiences. What do you mean and what is like digital assets and blockchain? Yeah, in very layman terms, let us know.
Okay, I'll do my best. So before we begin, I think we talk about assets, right? We are familiar with different assets, right? You know, for example, gold, like this is actually an asset.
Is this real?
This is not real.
Okay.
It's real, it's going to be very, very heavy. Yeah, so gold is an asset, and as you know, there are other assets like stocks, bonds, even currency is also an asset, or even like property as well. So, but when we talk about digital assets, then of course there are many other digital assets, for example, like Bitcoin. Bitcoin
is this real?
Digital. Okay, this is a physical memento, but digital assets are actually sort of on the internet, right? It's actually digital and without a physical form, and it is divisible.
Okay.
So other examples of digital assets could also include like NFTs, could also include like tokens and other cryptocurrencies as well. But
so maybe you want to let the audience know NFT stands for?
NFT stands for Non-Fungible Tokens.
Okay, yeah. What exactly are those? Because I've seen like pictures of monkeys, in the NFTs. So maybe you can explain to us, what do we mean by NFTs?
Yeah, NFTs are like, they are also digital assets, and how is it different is that actually it's a bit like IP, right? So it's about brand, intellectual property, it's about, it can be a picture, it can be a music, it can be a video as well. But the difference is that because they are actually stored on the blockchain, which I'll talk a little bit more about the blockchain, it's actually, we are able to track like who owns the ownership of that digital assets. Whether is it a cryptocurrency like Bitcoin or digital assets like an NFT as well. So all these can be tracked, and because it can be tracked, it can be we know who owns it. Therefore, there's a value to it. There's actually a real value behind it as well.
I see. So then maybe you want to explain to us what then is a blockchain. Just now you mentioned,
Yeah. So blockchain essentially, if you think about how we like keep currencies, like digital currencies, right? For example, we use Pay Now, or we have our currency in our banks. For example, in DBS, and then if I transfer some funds to you via Pay Now as well, that's in a form kind of like digital currency, or currency in the digital form, right? But end of the day, it's all being tracked on a database, right? So when we talk about blockchain, essentially these cryptocurrencies or these tokens are actually being tracked on the blockchain, which is essentially just an online ledger, right? A ledger, a record book that's actually stored on the internet that allows, that's made publicly available for everybody to actually view and be able to transfer funds as well. So that is essentially, in simple terms, I think, what is actually digital assets or blockchain.
I see. So if let's say I have a coin, I just need to treat it like it's money.
Yeah.
It's just that it's in the digital space. Okay, so when I transfer to you, I actually have that blockchain, okay, and then when there's any transfer from A to B, B to C, C to E, so this is where everything is tracked and transparent.
Yeah, it's like internet money, right? So you think about it, the blockchain is like the internet. And it's what it is, just a record system on the internet that allows people to access and see. So these are like super highway, right? Basically, if I transfer it to you, we know that we can see it. We can actually trace the way that it's tracked as well. So that's essentially how the blockchain works. And the blockchain works is different from a centralized database. Like typically if you have like the PayNow system or the FAST system or whatnot, or the SWIFT system that allows us to transfer currencies across different systems, is actually owned by companies or the private companies, right? So it's an internal database,
I see.
right? But for the difference for the ledger or the blockchain is actually on the internet, and it's actually being secured by specific computing nodes that secures the network through cryptography. So that is essentially what blockchain is about, a public ledger that is secured by cryptography.
Yeah. So when we talk about we want to invest in digital assets, just now you mentioned there are different types.
Yes.
So what are the different types and how do we invest in them?
Yeah, so there are a few different types. So I think one most people would commonly know is actually Bitcoin.
Okay, let's talk about Bitcoin first, since I think most people would have heard of it. And then sometimes we hear it to be like going as high as like 60,000 US dollars.
$68,000.
Or 68,000. And then after that, there's a period of time like last year, it dropped all the way down to like a few thousand. Yeah.
About 30,000.
Oh, 30,000, 40,000. Yeah. So why is there such a big fluctuations in terms of all this Bitcoin?
Yeah, so actually cryptocurrencies, especially like Bitcoin and stuff, they are volatile assets. They also provide a store of value as well, especially for Bitcoin, the whole utility behind it, like a decentralized money. But essentially, as we all know, right, even for stocks, at the end of the day, the value of an asset is actually dependent by sort of perception and also by its intrinsic value, right? So in the short term wise, there is volatility because people buy or sell based on emotions. Right? So it's actually quite similar for cryptocurrencies as well. But in the long term, as we know about value investing and stocks as well, in the long run, the asset will actually go up to its own true intrinsic value. That's something that I've learned from you actually, since I started learning about investing about five years ago as well. So that I truly believe that in the area of digital assets and blockchain as well, especially for cryptocurrencies like Bitcoin that have strong fundamental value and utility behind it, that in the long run, it actually appreciates to a price that it's actually worth way more. And behind it, which I think is, I'm very excited to talk about the topic about Bitcoin now, because in January, this is the month where the ETF or the Bitcoin ETF is going to be approved, or probably going to be approved. So the deadline for the approval is between January to March.
I see.
And what we're looking at is during this period, we're expecting to see the Bitcoin ETF that's being submitted by BlackRock, one of the biggest fund managers, holder of the world, holding more than $10 trillion of assets. We're looking at Fidelity and all these companies that are actually submitting their approval for SEC for approval. So this is going to be very exciting. And I think one key thing is that I think there's a lot of tension with regards to Bitcoin is because now it's different, right? In the past, cryptocurrencies has been very volatile. It's also because of it's mainly more of like speculation. And a lot of retail investors as well, they're just speculating and they don't really know how to invest in this safely, because they're taking like high leverage, they were using margins, they were actually trading in crypto futures as well. So that in a way it makes it very volatile. But in this year, which I see, when institution funds come in, like, big boys come in with large amount of funds, that will provide more stability and you reduce the volatility of the price as well. So, but of course, then your opportunities for getting that 2-3x or even more returns will be reduced, right? But the price will be more stable moving forward, especially once the ETF gets listed.
So when you mention about utilities, I keep hearing this word. If you talk about money, you see, I have been using money since young. So when you talk about money or real coins, I know, okay, I can exchange the currency to buy something. So there's a value to it, right? So in terms of all this cryptocurrency, you mentioned utility. Can you give us examples of what utility means? That means, can I use cryptocurrency to pay for my like utility bills, phone bills? That's utilities, right?
Yes.
Yeah.
So let me talk about Bitcoin. For Bitcoin, when it was created by Satoshi Nakamoto, essentially he created this whole blockchain concept, and the cryptocurrency is the idea of decentralized money. So the whole question of why cryptocurrency, right? When we have like fiat currency. So then we go back to the fundamental problem. We ask ourselves, what is the current sort of problem that the inventor of Bitcoin wanted to solve? And essentially the problem was that actually they realized that in today's day and age, the governments of the world are printing a lot of money, especially US, right? The US Federal Reserve have been printing like trillions of dollars of debt just to actually fund and to actually prop up the economy as well. It's especially more so during the COVID period. During the COVID period, they were printing a lot of currencies, adding more zeros into the bank account, and then giving the money out to a lot of companies and individuals. But of course, the problem of that is that actually, essentially, when you increase the money supply, what will happen is that the currency and the value of the currencies will actually depreciate. And not only that, more importantly, US is actually exporting that inflation because there is consequences of just printing money, right? Like, for example, now in the world, there's like, let's say $10 trillion worth of currency, let's say. But if now the governments of the world print like double it, 20 trillion, essentially your currency will be worth less, or
inflation
goes up, which is this is what's happening today, where inflation, our coffee has gone up in price, food has gone up in price, transport like Grab has gone up in price as well, and this year
GST is going up.
So yeah, it's going to have a lot of knock-on effect. And not only that, US is actually exporting a lot of this inflation to other countries around the world. That's why you see a lot of other countries, especially in developing countries, or even the Malaysia ringgit and whatnot, you can see the Japanese yen, Malaysia ringgit, a lot of them currencies are depreciating because of that exporting of inflation to the other countries, because they are the US currency. So essentially what Bitcoin is trying to solve is that having a decentralized money that has a limited supply, that you can't just keep increasing the supply as and when you want.
So I cannot say I just add one in the digital space. We can just print, right?
Yeah.
So I cannot just say, okay, one more Bitcoin, or they say this thing called mining.
Yes.
Yes, okay, so later we'll talk about this thing called mining. So I cannot just say I mine more Bitcoin, or even the government, they also can't do that.
They can't, because it's actually already developed, it's already built in the algorithm, it cannot be changed. So there's a limited supply in the world. Okay, so there are new supply that will be added, but that has a limit of like, I'll check the numbers, right? There's a total amount that is already limited, and basically every time there's a mining, there is a small supply that's being added, but the maximum supply has been already secured. So no matter what, there's no way that anybody can just keep sort of adding new supply to the entire, like for example, if let's say the world has $10 trillion of currency today, then we say that forever there will be just $10 trillion, but we have to work within the $10 trillion, or you can add into the currencies, whatnot, within this limit. So that is the upper limit. So when you don't have that, then of course your value of your assets can depreciate, right? Because people can just keep printing money, and then that creates a lot of problems as well. So I think one key problem that we're trying to solve is that you want to have sort of a safe haven asset like gold, where there is
also
kind of limited.
Yes.
Because in order to increase the supply of gold, you need to actually physically mine for gold, right? Dig prospects and mine for gold. So Bitcoin is similar as well, but the supply of Bitcoin is actually, even for gold, the supply is unknown, because you can still keep digging, and then as long as there's gold in the world, you can actually do that. But for Bitcoin, it's a flat, limited amount that cannot be added anymore.
I see. So just now you mentioned about if we want to invest, let's say, in cryptocurrency, Bitcoin is just one of the most popular one that we know. The other one is Ethereum.
Right.
So if we want to invest in it, what are the risks involved?
Yes. So there are several risks out there when you talk about investing in cryptocurrency. I think number one is firstly volatility risk, right? Because the asset class can move up in price or down in price. So that's the first risk, that when you invest in it, you don't want to put more than you can afford to lose. We've got the asset class. The second one is, so the other kind of risk is you're talking about regulatory risk.
Regulatory risk.
Regulatory risk, if like a government, like maybe China or what countries, they actually banned, like especially US, if they ban like cryptocurrencies. I know for a period of time China tried to ban cryptocurrencies for a while, but they have failed to do so because of enforcement and because of, more importantly, at the end of the day, it's a decentralized money. You cannot stop the whole nature of decentralization. So a lot of governments have already adopted and opened up to this whole idea of that. The third risk that we talk about is also from a cybersecurity risk, because today there's a lot of like social engineering, a lot of scams and whatnot. So if you don't know how to secure your digital assets properly, then that could be stolen from by hackers and whatnot. And we talked about the fourth one, which I think a lot of people has been heard of in terms of the bad news and stuff in the past, is with regards to custody risk. Have you all heard of like FTX?
Oh yeah.
FTX and whatnot, where
what if they close down?
The company closed down because they were holding their custody of assets for the clients.
Yes.
But behind the scenes, the CEO was actually doing other things with the money, betting, using the client's funds to actually make high risky bets and stuff, which is illegal, right? So that is important. So when we talk about storing your digital assets, you need to know how to store it in a secure manner. Even the selections of crypto exchanges they want to use, it's also important, right? So why would you want to use a regulated exchange versus an unregulated exchange? That makes a difference as well. And more importantly, to also not put all your eggs in one basket.
Yeah, diversification.
Very, very important.
Yes.
I think that applies today to digital assets as well.
So in any investing, please note that there are risks, okay? So the way to mitigate risk is definitely knowledge. The more we know, the more we would know what to do and how to invest in it and how to do portfolio management.